So let's talk about the jobs figures that we got in the U.S. Big concern. It looks like stall speed in the U.S. economy. How is that going to impact China? Is there going to be any impact?
Well, clearly, when China looks around the world, it doesn't look like a very happy place. I think for China itself, they're sitting waiting. They understand that the global economy has slowed down. They're hoping, like us, that we still see growth in the US and Europe in the second half of the year. I think that seems to be still the core scenario. We get maybe 1.5% growth. But there is, of course, a risk of some kind of event which plunges us all into despondency and very slow growth again. So I think China's waiting to see if we just get bad growth, slow growth, or whether something more serious happens.
Waiting to do what?
Well, policy larder as they had last time around 2-3 years ago. They still have space to stimulate if they need to. The fiscal accounts look okay to us. Reserve ratio is up at 21%, so if they wanted to, they could reduce that.
That's true.
Give the banks more liquidity to lend.
Okay, and when do you think they might do that? What sort of data are we looking for?
Well, I mean, we're all waiting, of course, for the CPI to roll off. We're looking for 6 and 6.3.
You're looking for 6.3? That's slightly above consensus.
Slightly above consensus, but at least consensus is telling us that over the next 6 months, CPI in China should come down. If the US is going to have slow growth as well, that should mean global oil prices remain constrained. That should help China too. People are growing pigs all over the country as well, so pork prices at some point, there's lots of new pigs out there.
You've been to a pig farm lately?
I haven't been to one lately, but my friends tell me they're growing pigs.
Okay.
So that should help as well. So I think China waits to see CPI come off. If hopefully that can happen, and then they can stimulate if they need to.
All right, let's take a look at those big figures we're expecting this Friday, consumer prices, right? We're expecting 6.2%. You're expecting 6.3%, slightly above. But have we seen the peak for CPI, considering the economic slowdown?
Yeah, we've seen the peak in year on year. The last two, we think this will be the third month. The month-on-month number de-accelerates as well.
How concerned are you with PPI numbers? It looks like economists are forecasting 7.2%.
Yeah, well, they're always very high. And the mystery,
but doesn't that filter through to the consumer?
Well, the mystery is that it never seems to filter through. And there's such great productivity growth in China that all those raw material prices get absorbed into productivity, and then CPI remains below PPI. If oil remains where it is, that should mean by the end of the year, PPI is well below 4%.
And don't you find it surprising that we still have CPI numbers at 6.2%, considering you have, I guess the gas and oil prices are capped to the pump, so you're not really paying the real prices, and also electricity as well, you're paying below market prices. Yeah,
well, I mean, when you look at the global oil price and the price that Chinese drivers pay at the pump, you could actually see, I mean, we're paying much more than we need to. We could actually see an petrol price cut in China. But the government hasn't yet decided to do that or not.
Yeah, it all depends on the government and what they want anyways. Okay, so what about industrial production numbers, fixed asset investments? Some are saying that's a big clue as to how much further the economy might grow.
Yeah, I mean, all the PMIs are suggesting that industrial production will probably weaken a bit, probably 12-13% thereabouts. Fixed asset investment is really interesting. You've seen a very marked decline in infrastructure investment growth, but private sector manufacturing investment is still very high, and real estate investment is still very high. So the risk there that as we go into the end of the year, all these inventories of unsold apartments rise, and that feeds through to developers stopping projects, and that is a downside risk.
Yeah, and retail sales, don't forget, that's a big one as well. 17% expected for the month of August is how much the Chinese consumers are spending instead of stocking into their mattresses. Okay, so what would be a big surprise number to you, either on the downside or the upside?
Well, CPI above 6.5, that would be freakily scary, because it would mean they didn't have as much space to loosen. And then a dramatic decline in IP, industrial production. Obviously with the PMI, the manufacturing PMI, just above 50, it suggests that the industrial sector is not doing great. Okay,
one more question for you before I let you go, Stephen, because there's a lot of naysayers on China's growth right now, and you keep talking about there's a lot of build-up still in the property sector. What do you say to people that talk about, say, a meltdown in China?
Well, I say go and visit some of the second and third tier cities. We were in Wuhan last week, and there's still an awful lot of growth. People are working. People want to get a better education. Productivity growth is really strong. Private investors are investing continually. And there's a lot more urbanization to happen as well. So there is a cycle, clearly, but I think the long-term story for China is still in play.